Today marks history. HBAR just became the third cryptocurrency ever to get a spot ETF on Nasdaq, right after Bitcoin and Ethereum. While everyone's watching that, Hedera quietly dropped 250 million tokens worth $42 million into staking rewards. TVL jumped 17% in 7 days, and the chart's showing something most people are missing. I'm holding a long-term position, adding to my bag in a specific zone, and there's a technical setup forming that could push HBAR toward 29 cents in the short term. But there's more to this story than just price action. The Canary HBAR ETF started trading on Nasdaq this morning, October 28th. This isn't just another crypto product launch. Out of more than 19,000 cryptocurrencies tracked by CoinMarketCap, only 3 have achieved this level of institutional validation: Bitcoin, Ethereum, and now HBAR. That's the company Hedera's keeping. The ETF holds actual HBAR tokens in custody with BitGo and Coinbase, using CoinDesk indices for pricing. What this means in practical terms is that institutional investors who couldn't touch crypto directly now have a regulated pathway in. But here's what caught my attention. Alongside this Canary ETF, there are 12 other ETFs already filed that reference HBAR. We're talking about products from Grayscale, Rex, and multiple other institutional players. This is definitely not speculation anymore. This is infrastructure being built in real time. Let me walk you through what I'm seeing on the weekly time frame, because this is where things get interesting. HBAR is currently trading around 19 cents, sitting right in the middle of what I call my accumulation zone. That green box you see between 16 and 22 cents? That's where I'm building my position through dollar cost averaging. The price is above both the 200-week moving average, which is that green line, and the 100-week exponential moving average in yellow. Those are your long-term health indicators, and being above them is what you want to see. Right now we're fighting with the 55-week EMA, that purple line, while the faster 10 and 21 EMAs sit above us in blue. That's your short-term resistance cluster. Here's my setup. I anchored a Fibonacci retracement from the top at 39 cents back in December and January, down to those double bottoms at 12 cents we saw in April and June. The 1618 extension level sits at 55 cents, which lines up perfectly with my third profit target. My first target is 29 cents, where that volume point of control shows on the left side of the chart. That's where I'll trim 20% of my position. Second target at 39 cents, the previous high, I'm taking another 30% off. The third target at 55 cents gets 40%, and if we somehow reach 82 cents at the 2618 extension, I'm exiting the final 10%. But there's resistance we need to break first. That descending orange trend line from the July top has rejected price multiple times through September and October. We need a weekly close above it with conviction. The Heikin-Ashi RSI at the bottom of the chart just printed its first green candle after 5 consecutive red ones, coming out of oversold territory. That's often your early signal that momentum is shifting. My risk management is simple. For short-term traders, a weekly close below 15 cents means you're out. That's the red dashed line on the chart. For me, holding long-term because I believe in the project, if we do break below 15 cents, I'm looking to reaccumulate around 12 cents where that double bottom support lives. I trail my stop loss as I hit targets. When I take profit at 29 cents, my stop moves to break even. Hit the second target, stop moves to the first target level. This way, once you hit that first target, you're in a risk-free position. While the ETF grabbed headlines, something else happened that tells you where this is headed. The Hedera Foundation just sent 250 million HBAR tokens into account 00800, their official staking reward pool. That's $42 million at current prices going directly to reward people who stake their tokens through Hashback or Kabila app wallets. This isn't marketing spend. This is the foundation putting real capital to work to secure the network and incentivize long-term holding. And it's working. According to Chain Broker's data, Hedera saw a 17% increase in total value locked over just the last 7 days, adding $106 million. That's capital flowing in, not out. Look at the Hedera Council members. We're talking about Google, IBM, Deutsche Telekom, Dell, Chainlink, Standard Bank, Tata Communications, LG, and about 20 others. These aren't crypto companies trying to look legitimate. These are Fortune 500 institutions that joined Hedera's governance structure because the network was built from day one to be regulatory compliant. No legal gray areas. No shortcuts. According to Chainspect's latest decentralization report, HBAR scores exceptionally high with a Nakamoto coefficient of 7, meaning you'd need only 7 validators to collude to control 33% of the stake. But with 31 validators in the council and $2.8 billion staked, that theoretical risk is distributed across real institutional entities with reputations to protect. The foundation made it clear, ETFs might be the end goal for some networks, but for Hedera, this is one piece of a bigger puzzle. Next up is institutional-grade DeFi built on a network that can handle enterprise-level throughput without compromising on security. Here's what I'm not doing. I'm not going all in at current prices, expecting an immediate pump. The chart shows resistance that needs to break. That descending trendline is real. The 55 EMA is real. We could easily consolidate in this 16 to 22 cent range for weeks before making a decisive move. But when you combine institutional adoption through the ETF, capital flowing into staking rewards, TVL growth, and a council of actual blue-chip companies governing the network, the risk-reward setup looks compelling for patient accumulators. I'm using the green zone on my chart to build size, managing risk with that 15-cent invalidation level, and targeting those Fibonacci extensions if momentum confirms. So that's where HBAR stands right now. Third crypto with a Nasdaq ETF, 42 million in fresh staking incentives, institutions building infrastructure instead of just speculating, and a technical setup that could deliver if we break resistance. I'm treating this as a long-term hold with defined profit levels, not a short-term gamble. If you found this breakdown useful, hit that like button. Let's spread the word about HBAR. Subscribe if you want more daily analysis that cuts through the noise and focuses on what actually matters. Join my free Telegram group for daily updates, links in the pinned comment below. And if you want to know how I'm looking at XRP alongside HBAR, or my previous HBAR analysis, those videos are on screen now. Thanks for watching, never financial advice, and I'll see you tomorrow in the next one.